Hey, what's going on, traders and investors? This is JD, the mobile trader. It's Monday, May 24th, 2021. Let's go right to it. Bitcoin. Ride the waves, guys. If you're in it for the long term, long haul, expect this. Okay, we're looking at the daily chart over a 5-year window. We've watched the run up, the big time run up. You know, nothing can go wrong during a run up. Ran up to 65K. And if you're familiar with, it's called the Wyckoff cycle. You know, irrational exuberance, markup, then you'll have a distribution, a panic, and then there'll be a buy area. Okay, we've had some buy areas, but what we're testing are previous lows, 30,000. We've already gone down and touched it. There is a gap that we need to pay attention to, guys. If you like Bitcoin at 36, and you're in it, you need to think about stepping away and embracing it if it comes down to that 25 area. That's filling the gap. It's a gap fill that happened. The gap happened December 28th of, I'm looking at the year, man. I mean, that was this year before, during that run up. So, well, I say this year, what am I talking about? 2020. So, guys, we may come back and revisit that level. We've already filled a gap right in there. Right where the purple is, that time frame was in February. We've come back all the way through that threshold, and we're looking for support. Support's at 30 right now, but it's kind of holding up around that 35. We're going to have some range-bound movements. And who knows, we could get some positive news and Bitcoin could blast. But I really feel we're going to retest that 25. Now, one of the things I want to talk about, for the bear case, what's going on is the mining issues, the clean energy problems. They're trying to make this into an environmental situation, which it is. I don't know how many of you have mined Bitcoin at your home before. You can't mine it on the little GPU units that you can mine Ethereum on. You need it. You need an ASICs. It's almost like, it's just basically a mini processor. It's loud. It's louder than a hairdryer. It runs. You know, it pushes. It's going to bump your electricity bill, but you can get the payout. But if you read here, there's some old coal plants, old coal mines that they're reopening, and they're trying to repurpose those things into Bitcoin mining. Mining warehouses, basically. This one mine is trying at the bottom left over here, bottom second to the last paragraph. The company is aiming to produce at least 55 Bitcoins daily by the first quarter. So the type of mining power and hash rate that you need to do that is unreal. If we go over to the final column, there's you have some bills on the table that are going to try to put a moratorium on cryptocurrency mining on emissions concerns, you know, like a 3-year window. So, okay, what this is going to do, we're going to have short-term volatility, negative outlook on mining. They're going to say Bitcoin mining is bad for the environment. China's getting on it. And the idea is they're going to make mining almost seem criminal, but they're not going to be able to shut down those mines that they can't find. There's going to be a lot of miners that are out there. So short term, that's going to make that price of Bitcoin dip. It's going to put pressure on it. Ethereum's going to, the entire crypto market, this is my opinion, is going to take a dip if Bitcoin goes down. Now, there's some smaller coins that I know, like there are a lot of individuals who have a really good feel for different coins that are inversely correlated to Bitcoin, things like that. But in the long haul, over the long haul, when they cut down the miners, when they say not going to be as many miners out there, it's just going to be harder to mine Bitcoin because you have to, just for what you need, the processor, it's a labor. It's a laborious task. It's a labor of love and of you trying to get that money, but it's going to be harder to mine, but this is going to make the currency more valuable. It's going to add volatility, but in the long run, it's going to make it more valuable and it's going to make the mining payout higher if they cut down on the miners. The more miners who are on the block in mining and in running the hash, the smaller the reward, the tougher the difficulty level becomes. So, on the other hand, on the opposite side of that, Ethereum mining is less invasive, easier on the environment. You can use GPUs, CPUs. They also have ASICs that are being deployed from I think Bitmain, but Ethereum, the intrinsic value in Ethereum has not even been tapped for what they can do on top of that particular blockchain with the smart contracts. I think Solidity is the language that you write the smart contracts with. If your young ones are out there trying to code, go to YouTube and do a Solidity tutorial and kind of study up on that. But I really think Ethereum, if we can get it at these cheap levels, if it goes down below 2,500, below 2,000, we got to hop in by bit, no pun intended. Now, the last comment, they were talking about Coinbase. It says, is Coinbase stock a buy right now as Bitcoin plunges again? They're making the Bitcoin plunge. They're trying to make that into a narrative. And this is going to be another chance for the big institutional investors to get in at a discount. They're not leaving. They're not hopping out. They're already in. They're going to be able to average down because maybe some of them bought in at 50, at 40, at 65. You get it in at 30, 28, 25. You're cutting your cost basis in half, and really you're putting yourself in a position to, over the next 5 to 10 years, that's the time horizon, even 15 to 20, Bitcoin's not. You can't say there's never a guarantee. There's only probabilities and risk involved. Who knows what it's going to be? But I mean, 100,000 isn't out of the question. Ethereum, 10K is now the question in a 5-year window. So just consider that. But look at the short-term fluctuations and kind of let it ride out. We don't have to sweat it. We can let, it's going to do what it's going to do. And we cannot change price. Who cares if they're manipulating it? Expect it. But the only thing that's being manipulated are going to be the narratives in the media. So establish your time horizon. Decide if it's going to be a long-term play. And if it is, turn it off. Just get away from it. Don't even look at the chart. Let the news come to you and just, if you're going to start getting in every 2 to 3 weeks, hop in. Put your money in or step away. But don't panic sell unless you need the money. And we really shouldn't be putting money that we need into a speculative play like Bitcoin. So guys, have a great Monday. Hang in there and ride the waves.